right, let's jump into it. So, look, it's pretty quiet on the sort of so much of like, well, kind of quiet on the data front to sort of start off the week, but of course, not a sort of normal bit of data actually. It only really comes, I guess, twice a year because they do like a revision of the revision, I think, in February. But what they do cover, it's actually not on this calendar for some reason, but this is the one that was the big sort of mover, the non-farm payroll benchmark revision. um, Basically, it seems it's sort of like a point in which, like, they revise they print the numbers each month. They then revise that month's numbers the following month, and then once a year in September, they sort of then do a big sort of like collective of the whole thing and do a big revision over the whole year. So it's kind of like, okay, well, we've revised the numbers from last month. Turns out, the other month there was 133,000 extra, um, or whatever joke it was. And then sort of like at the end of the year, even all those revisions aren't really that trustworthy because they do a big sort of collaborative sort of revision of all that. Last year it was 800,000 jobs over. And so there you got a minus 800,000 jobs from what you've actually sort of collected through the whole year. This year was the biggest one apparently they'd ever had. It was minus 911,000 jobs, which, I mean, that the head of the BLS or whatever it was, the statistics, the Labor Bureau of Labor Statistics, got fired the other week, which is rightly so because you're missing. You've only really got so many jobs, I know, but one of the key things is to correlate all that data and give an actual real number, and they just can't do that. Anyway, look, they've been given the boot. They've got a new person in there. This is an incredible kind of movement with it all. Sort of incredible kind of sort of revision of a number. But the thing is, with this data, you need to, I mean, you can trust it, not trust it, whatever you like. The market's going to react off what you're given each day, each week, each month, this kind of thing. So, it's all very well to sort of go, oh, here we go, this is $900 over, 900,000 over, and it doesn't work, but that's fine. Market will react to that. But each month, non-farm payrolls, you can't go, well, I don't believe it. Well, that's fine. The market's still going to move on it. Anyway, so that was about it in terms of sort of data. Wasn't really anything a great deal sort of coming out. I mean, we had a little bit of sort of Aussie data yesterday, but well, business confidence in Westpac really sort of shot down there. Didn't really seem to sort of hurt Aussie too much. It did sort of push right back up into those 66 areas, but that's since come off there a little bit as well. So it's quite interesting actually. If we get onto the charts to sort of have a look at a couple of things. So, I mean, not that I covered this a great deal, but this is the US 10s. This is the point where we had that data drop. It is the 10s have been absolutely hammered in line with DXY being hammered. Have I got DXY on this? No. Get onto that in a moment. These are nice little sort of bottoms. The fact that it's sort of like in this smaller kind of area means that, there's a chance that really it kind of just ranges around here. Maybe we see a drift back up to sort of test the underside of this support, which would take you up about sort of, 418, 42 kind of area. US dollar strength and that obviously through that sort of period coming into CPI and PPI, which are coming out tonight and tomorrow night. Both of those numbers are expected to sort of come down a little bit. Actually, let's get on to have what data. That was the data from overnight. This is the data sort of coming up now. So first of all, just quickly, we have CPI and PPI for China, both looking to be negative and moving in the negative sort of direction with that. You'd think at some point they need to address this though, because I mean the yuan has been strengthening and strengthening, mainly probably off the back of sort of US dollar being so incredibly weak. But of course, you still don't want sort of disinflation, sort of with prices and that. So it's all very well for the sort of prices to come down. Maybe they're sort of happy to sort of let this thing run to sort of spur on a little bit of sort of their local sort of consumption. Because apparently over there, there are very low sort of levels of consumption. I heard actually saying a while ago that sort of, the Chinese way, sort of like America, I mean, obviously it's a little bit different, they run off debt, but America, for every dollar they make, they spend a dollar 50 or something like this. And then for every equivalent dollar, like a little one, for every one they spend 30% of it. So it means that basically, sort of like, these guys are just, they're not spending, they're not out there buying stuff and that, because the reasoning behind that was that, they've been through all these sort of terrible times, and, it's ingrained into their culture just to save, 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 because the terrible times are going to come again, which is, I guess, sad in one respect if you sort of really happen to sort of care on a personal level, but, we're here for the economic data and that. And this is the thing that's sort of like, I mean, maybe the PBOC are happy to sort of like try and have these prices sort of coming down because they think that it'll spur on local consumption, which will sort of help sort of move things along. But typically, with these numbers moving down, you want to be targeting around 2% with the CPI and that. If PPI is coming and CPI is coming down, well, you want to sort of ideally have that moving forward. You want some level of inflation. 2% is the sort of standard that people expect, or sort of like, could consider the sort of level in which the market an economy can grow without sort of getting out of hand. So 2% is the target. Excuse me. Moving forward for the rest of it, not really anything of note until PPI tonight. Of course, producer price index. This is the price going to the wholesalers. We're looking a little bit of a sort of drop off here, but remember last month was quite a large beat to the top side. Look at this. The forecasts, it's like they're from the RBA or the people doing the forecasts for the Aussie data, Aussie jobs data, and that. Let's just spam that too in the middle, in the middle there. Wrong, 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 wrong. That's all right. But look, last month was quite a big beat to the top side. There's a good chance this will be an outlier. I covered this the other day, but if you look at the last couple of times that we've had these big beats, four came in at 7, following one came in at 5, so it was a bit cooler. You also expected a 3 after that one. These ones, oh 07, expecting 03, came in quite cool there. If you have a look, 1.4, which is quite a large one, dropped back to 05. So I would say that most likely we're going to see a little bit of a cooling, but as to sort of whether it comes down as far as they think, I don't know. Look, I mean, I'm not an authority on it, but I don't know if they're going to get it back down to that. So I think this is going to be one of those ones that sort of fits in the grey area, where it'll be less than last month, but above expectations. So still the way that you'd be looking for that is potentially that sort of like, US dollar would probably sort of strengthen a little bit on that, because in theory, you're pricing off the idea that the forecast is 0.3%. So any sort of disappointment, i.e. sort of a higher number there, should result in a little bit of a sort of a reaction for the market with a little bit of US dollar strength there. The flip side of that is if it comes in at 03 or comes in lower, you book this in as a sort of outlier month, and you go back to the narrative of the idea that, hey, inflation isn't an issue, and that really jobs are the thing that we're looking at, and we've obviously overnight just had that incredibly bad bit of jobs data again, which kind of fuels that whole idea that cuts are coming, all this kind of sort of stuff. So on that front, though, it does look like 25 base point is going to be the direction that the Fed will sort of go. You never know with these things. The idea that potentially they could cut higher is in the background, but it's not a big sort of one. There's not a lot of people trumpeting for that. But again, the idea that whatever the market's looking at, that's what they'll price for. If they don't get that, that's where we're going to get a bit more movement, i.e. if they're pricing for 25 and they gave 50, or if they're pricing for 50 and then they gave 25, they're the kind of reactions that'll sort of give us a bigger, they're the kind of sort of results, sorry, that'll give us a bigger reaction on the markets. And that's about it in terms of data. So let's jump back on the chart. So as I said, look, you could see there was quite a sort of little fast reaction here. The initial reaction was this move where we are at here, 12 o'clock here. Was a little move of a move down, but as you can see, sort of springboarded up and kind of drifted a little bit higher. I'll put a little alert above sort of 410 and that to sort of see if we get a little bit of a push up there as well. So have a look at how DXY sort of reacted off that. And this is what I'm talking about. That sort of like if we get those rates back up to sort of 420, well, you could expect to see probably US dollar sort of drift back up towards these sort of 98 levels over here. In terms of sort of where we're at, I'll pause this because it's boring. Bang, and there's some movie magic. Just to sort of keep the chart a little bit sort of clearer with it all. So, look, we have obviously seen, I was trying to sort of trade through this idea that we had a bit of a range. Moving on here, going on the 4 hour, we could sort of see it a little bit better. And really, look, for the most part, yes, it was working. Little overshoot, little overshoot, little overshoot, overshoot. We have came down here on the sort of NFP print, bounce back up, dribble down, and now we're getting a bit of a move back up. Has sort of come in line with this kind of little sort of not so much a falling, like it's not really a channel, but it's definitely a sort of falling resistance that it did sort of react off. And as you can see, a couple of tests through here. And this is when we had that little, that bit of data out last night, and obviously the market's just gone bang and sort of pushed up since then. Same coming in line with gold coming right off its highs as well. Well, I say right off its highs, that's relative. It's come about $50 down off its highs around the same time. So you can see that sort of correlation sort of working a little bit better there. But in terms of sort of where we're at with it now, it seems like this is a fairly decent little channel. It is drifting down. As I said, look, top side, you could see, excuse me, as I said on the weekend, eyes are on CPI, most likely going to be, well, it's looking and tipped to come in a little bit hotter. It doesn't mean that we're going to get mass breakouts, but it does mean that you might sort of see a little bit of US dollar sort of strength coming into it. And this is what I was saying. If PPI comes in and disappoints, I well, depends what you're looking for disappoints, but doesn't meet expectations and comes in a little bit hotter, then that would also fuel the idea that we could be moving up here a little bit higher as well. So let's even get rid of this one. So put in some new levels in a moment. So where to from here? So we've got this little break of the channel. That's fine. Work with a little resistance across here, and realistically, we still have that level through here as well. So there's certainly a lot of work for US dollar to do. The DXY and that should it want to sort of try and move up a little bit. I'll keep this previous sort of lower support area on because it did dance around it a little bit. If we do come back, as you can see, first little test holding it. Maybe if we come back here, close that gap, and then sort of see if we can hold it there again. That could give you a bit more surety that it's using it as a base to then sort of move on a little bit more. Of course, with these sort of things, as I've said a couple of times in that, gaps do like to close. They generally take, if they don't close straight away, it leaves it as a target, as a bit of a sort of magnet for later on. So should we not sort of close this, in the next hour or so, there's a chance we drift up a little bit more, but then in Euro session, I wouldn't be surprised a bit of a sell-off just to close that gap if it is going to sort of find this as a base and then sort of move on. So in the short term, look, above, if it wants to keep sort of dragging up here a little bit, we've actually got gold. And the reason I sort of mentioned gold coming off the highs there is because gold's actually sitting on a support line at the moment. So we could see a little bit more of a drip down with gold, which obviously would give us a little bit of a push up with US dollar. A little bit of a small sort of resistance here at 97.90, but I would say it's probably targeting 98 on the top side move here, and I would be surprised if we get through that. Look, it's just so incredibly sour on the sentiment. Cuts coming, all this kind of stuff. I've covered it a number of times. Last year we had sort of 50 base point cut around this time of the year. It got hammered right up until the rate decision. Rate decision this year, well, this time is in 1 week from today on the 17th. But as we saw after that, it kind of took off. And, it's one of those things that everyone's sort of like, oh my God, oh my God, oh my God, oh my God, till it gets to that point. And then that's out of the way. Okay, cool. We move on, look for something else. So the greatest sort of moves are generally sort of in the anticipation for the move or for the rate decision or for the bit of data than the actual bit of data. And, even if you look last night, it was a bad number. Look, jobs is the number one thing they're looking at. And what did they do? They shot it down for a second and then bang, moved up to the top side. Bang. Okay, that's out of the way. So you can look to move forward. But yeah, I think certainly they're the kind of levels that we kind of be looking at least in the short term. Probably actually drag. I think I just deleted this a moment ago. That I had it as like a purple line. Whatever. That's the line for it to sort of get above in my opinion. If you can move up over here, then I think you could be moving up to sort of target this falling resistance here. So I put a little alert on this one. Downtrend channel. So moving through there, though, to me, it's really, this is kind of probably where you'd see some sellers come back in even if this were to sort of progress up here a little bit more. 4 hour, you can kind of go, hey, I don't like the wicks are crossing, but I still think that's a gap that needs to be closed. Um, all right, so move along. We've got gold. As I said, gold sort of coming off a little bit of a support here. Jesus, has been an incredible sort of run on gold. What was this little? That's the kind of support that I'm talking about here. And this is what I'm sort of saying, that I think that sort of like, should this thing sort of break through here, it doesn't mean necessarily it's come down, but as you can see, a bit of an engulfing. This is on a 4 hour engulfing, followed through, back test, room to move here. I would definitely say we could see a little bit of a cooling off. I mean, look at this run. It's just been absolutely insane. So even if we sort of say, hey, look, that's the low of that move, of the actual breakout move, we had a little bit of a drift down here first. Look, 36 is only at 23%. But, these things come in step-by-step kind of motions and that. And obviously overnight, we had that sort of little flick. If you have a look at when the data came out, it actually shot up another couple of bucks and that, but held and then sold into quite quickly. And it's just been on a drift and a dribble down here at the moment. Even you can see 2 touches on this thing here. So I think, look, if it goes underneath this level here, so if we go take out that wick low, I would say that probably opens you up to at least a move back down to test 36. So I would say another 20 bucks or so. In the scheme of things, that's not really that much, of course. And as I said, it only takes you back to the 23% fib line. But there's definitely an intra-session sort of trade in there, and then sort of you probably see some buyers sort of step back in. That's provided that it does actually sort of go down and go through this. Of course, if it doesn't, well, bang, on she goes with it all. But most likely, as I said, with US dollar looking like it's about to sort of push up a little bit more, you're probably going to see this sort of at least break down here. I wouldn't be surprised. Come back to 36 and then maybe bounce back around this area over here, and we can sort of see how it goes from there. But first time we've actually seen something somewhat negative with some sort of follow through. As you can see, we've had sort of negative pullbacks, but it's very much just gone flick, buy mode, and just grind, going all the way up through there. So that's a little alert just to go down under here. I don't know what that one means. So move back down to 36 and then sort of see what the buyers want to do. If it does go under 36, you're moving maybe 35.80 in that, but I wouldn't expect it any further than 35.80. I expect very much. I mean, that's almost $100 discount from the highs of last night back down over here. So it's funny because sort of like obviously gold's been dormant for so long through this period. Well, I say dormant, but up, down, up, down, up, down. We got used to these incredible $100 moves very quickly going through this area here. And then it's really just sort of been consolidating. We've got our big breakout. Question now is sort of like, where do they double up on this and thing? Like, do they just sort of take it from here and just keep on running it? Do they sort of like really come back down and test these breakout levels? I mean, there's a lot of sort of lot of questions, and a lot of it really comes down to what the market does with the US dollar. And if they sell it off even further, well, that opens the door to more upside. But if they do find a little bit of support and reason to buy the US dollar, which I've been, harping on about for a while, to my own detriment, that could definitely see gold. That could be a period where sort of gold cools down a little bit more. But I would say if in the short term, till you get underneath sort of 70s, like, 35 70s, maybe under here you could see a deeper sort of correction. But anything above there, I imagine to be bought up at least for now. And maybe we could get a bit up, down, up, down. But underneath 35.70, then I'd be sort of looking at a couple of these lower levels for a deeper sort of support. I mean, look, this thing could actually, as I said, it's on support now. This little sort of channel support. It could very much just hold this. Didn't quite get there for. I'd be reluctant. I've been sort of viewing more of this kind of stuff recently, and it's not really been playing out. So look, anyway, first things first, break the channel, look for 36. That's the intraday trade. A second effort down through these levels, maybe around to the 80, but I imagine buyers definitely to be lurking around the zone over here. that kind of area through there, if it even manages to get down there. All right, flip along. We got Aussie again up above 66. It almost sort of came in like, as I've said, I'll show this because I always sort of cover these things. 20s, I haven't got it up here, but 20s, 90s, and 60s Aussies love. Aussie loves. And if you put this onto close enough, good enough there. Very much got into the 9s, got into the 20s, sellers came in again, bang, and it is once again pushing it back down over here. So we have a little double bottom down here at 64.20. This is almost looking like a little bit of a double top up over here. Should this thing decide to sort of push back down over here, again, a lot of this is going to be based on what's happening with US dollar as a whole. Going to update this and sort of see if we get any reaction as we sort of come back down into this level here. So where to from here? I would say this is probably a level that you'd probably be fairly targeting in that 65.50. Should it sort of come down here, depending on what speed it sort of comes down at, you've got a sort of previous support, you've got a previous resistance. You know, this is even sort of up a couple of points higher, but this is the area that I'd sort of be targeting. I think you're going to get some sort of reaction should you get through into the 65.50s and that. But certainly on with the show with Aussie. It is just buy the dip, buy the dip, buy the dip. But at the same time, you know, it really has been sell the rip as well. I mean, look, this thing has not really moved much in the grand scheme of things in months. You know, realistically, talking like 3% or so, which, you know, 3% is definitely a tradable area, but it's just not breaking out. You know, it's not going higher, it's not going lower. The closest it got to going lower was this double bottom here, but obviously 64.20, that's the big trigger point now. As I say, how many times have we been lined up for this thing? Even got a break of this channel and then sort of kept on going. But 64.20 would be the area you're kind of looking for. I'll put an alert on this anyway. It's a while off, but we've got a major trend support. Get down to the lower time frame here. As you can see, it's trying to hold this little zone that we got through here. If US dollar, as I said, starts to sort of push towards that sort of 98 level, we could see this sort of push back down here a little bit as well. It's really on its line with support here. So little, oops, not copy right. Not sure what that one was. Let's just reuse you. Half a point off from this, you don't really need an alert, but let's just put it there just in case. And that'd be your trigger point there. So you'd probably be targeting at least probably another 25, 30 point drop off down to the bottom side over here, should this thing sort of break through, and then sort of expect probably some buying efforts probably around the 50s level. Gold we've covered, DXY we've covered, and copper. I mean, copper is not really anything to say. It's just grinding sideways. Maybe a little bit of a head and shoulders here. Not really anything that's sort of tradable in this point, in my opinion. I think we do have downsides sort of coming here. But again, you know, as you can see, it's really just such an ugly chart. It hasn't really got anything. It came up and sort of rejected right on that point. And so I imagine it drifts back down to the bottom side over here. But it's nothing that's sort of, for me, tradable at the moment. And USD CNH, so the one. This one obviously sort of came up, tried, bang, slap down, slap down, slap down. Now this has even come even closer to this massive high time frame support. Enough to sort of say that that's probably a connection. Obviously we get a little bit, when you're working with like higher time frames like weeklies and this kind of stuff, well, you know, you can afford to have a couple of pips either side of it all because, you know what I mean, we're talking weekly time frames here. But the point is, it's had a second effort down into here. These particular setups here, if you look at this particular candle setup, I have a big strong candle down, kind of call it a hanging man, takes out the lows, but then rejects back up. These can be very big reversals. We know that it's coming off a super strong area. This is a weekly support area where we've seen the market price this thing previously. We've got the sort of 61%, not including the big spike. Um, and also we've sort of got this sort of large rising support, which is pretty much coming right in contact with it here. So should this thing break the highs of last week, that's your trigger that we're going to see some more US dollar buying. Look, until it gets above 723, it's not really kind of crazy, but it is something to sort of keep in your thought because it does have a strong impact on Aussie and it does have a strong impact on gold. So we'll sort of see how this thing sort of plays out. Actually, just on that as well, we're sort of seeing gold react off that little off that support line now. Are we? Sorry, not yeah, gold. I guess it's trying to hold that little support line here, refusing to go down lower. DXY was the one I wanted to highlight, coming up into that first little resistance area here. So a breakthrough here, you could probably see another 10 points or so to the top side, but I imagine it to be sort of sold down into there. So with these sort of things, when you're working with the correlations or the cross chart correlations, you want to see it make the most of that move. So, i.e., you want to see gold break while you're seeing this move up here. If gold holds while this moves up here and then this bull sells off, then you're going to see gold rally just off that point there. So it's just one way to use that cross chart confluence there. All right, so look, that's pretty much it. I think gold silver ratio. Look, there isn't really a great deal to sort of say of this. We have seen a little bit of a rally. 3 attempts to hold this sort of support area seems to have done fairly well. It, look, it's kind of come a little bit detached from price movement because typically you would see these moves up like this. This has been coming up since, where's this, last week and a half. And gold's also been ripping to the top side. Technically, yes, gold silver ratio, gold should be moving up with that. But as a whole, the metals market typically will move stronger to the top side as this chart moves down. So this moving up with the gold also moving up and silver also moving up isn't really how things typically work. So, it's just something to keep in there. If it was a while back over here, it was working very well. Uh, I haven't sort of really been able to sort of pull anything out off this chart more of late. All right, that's it from me.